Greetings, everybody. Welcome to Liberty Call. Today is Monday, February 26, 2024. Hope everybody's having a fantastical day out there in the interwebs. It is a beautiful day here in Colorado. Sun's out. It's not too chilly. And I'm going to probably have some ball time with my main man, Jake, in a few minutes once I get everything wrapped up here for the day. So looks like the markets did not finish in a good mood. We got a good amount of red on our screens here. And let's flip through the globe. Yeah, I see lots of red across the globe. So Monday the 26th was not the best day in the markets, not just here locally, or domestically, but also around the globe. So anyways, again, hope you're having a good day. Hope you had a good weekend. You can see my injury here from a week ago is healing up. I did hurt myself, unfortunately, this weekend. I pulled a muscle in my back and was out of commission most of Saturday. And I did get a little work done yesterday, but moving like the Tin Man right now, and trying to bend over is just very, very painful. Anyways, like I said, hope you're having a good day. If you could do me a favor, if you could give me some thumbs up, a like, a share, a subscribe, a follow, and press that notification bell. Let's go and get into today's numbers and see how the world turned out. Dow Jones was down 0.16%, 62 points, closed at 39,069. S&P 500 was down 0.39%, closed at 50.68. NASDAQ down 0.13%, closed at 15,976. The VIX was down today, now it just changed to flat. It's currently sitting at 1375. Canada down 0.41, Brazil up 0.18, and Mexico down 0.81. In Europe, Germany was flat, up 0.02. The UK down 0.29. France down 0.46. The Netherlands down 0.25%. Spain up 0.08. Italy down 0.44. Switzerland down 0.38. And Portugal down 1% flat. In Russia, both exchanges were green today. The MOEX up 2.16. The RTSI up 3% even. And the Asian markets, looks like they were all open. The Nikkei in Japan was up 0.28%. Australia up 0.12%. New Zealand up to 0.24%. In China, the Shanghai down 0.93%. Shenzhen Component down 0.04%. China A50 down 1.64%. DJ Shanghai down 0.77%. Hang Seng down 0.54%. And the Taiwan weighted up 0.31%. All right, so that was everything for the how the markets did today. Like I said, not too great, nothing terrible at the moment. But, again, it kind of feels like we're waiting for something just unfortunate to happen, whether or not it's some sort of a, financial event or something in the government. Or, like I said, I feel like something unfortunate is going to occur, create that black swan, which, will give the Fed an opening where then they can come in and lower rates. Because as of right now, my personal view is, if the economy is as good as, the talking heads on the business channels and out of the government say, if they're saying everything's wonderful, why do we need to lower rates? I mean, seriously, wait, keep raising rates until the economy actually starts to, slow down a little bit. So, but I mean, in my personal opinion, the economy is slowing down. But, again, the people on TV don't seem to share that opinion. All right, let's get to today's weekly economic update. Stocks vaulted to new heights last week on the back of an artificial intelligence semiconductor company, marking investors' belief that AI has the potential to transform the U.S. economy. Stocks rallied to record highs. Stocks traded in a fairly tight range for the first half of the short week, yawning at the lack of economic data while awaiting earnings results from one key company that creates chips that power the artificial intelligence operations of many firms. A strong Q4 corporate report and long-term message from NVIDIA Corp pushed the S&P 500 and NASDAQ to new closing highs on Thursday. NVIDIA's market cap rose by $277 billion on the news, pushing it to a $2 trillion valuation. To put that in perspective, NVIDIA's market cap is now roughly the same size as Canada's economy. Its 16% gain on Thursday was the largest one-day market cap increase by any U.S. company. Remember, companies mentioned are for illustrative purposes only. It should not be considered a solicitation to purchase or sale of any company connected with AI. Yeah, they don't want to get busted for recommending something. All right, an inflection point. NVIDIA's seismic increase in market cap gave investors pause for reflection, wondering whether the market is whether this marked an inflection point for artificial intelligence. The main story that investors took away was that because of its market dominance as the leading global provider of AI computer chips, NVIDIA served as a proxy for AI. Some of the world's most influential companies rely on NVIDIA technology to power their own AI initiatives. Investors appear to have concluded that AI's impact may just be starting and anticipate it will be a driving economic force in 2024 and beyond. Economic data this week. Today, Monday, we have new home sales and the 2-year Treasury note auction. Tuesday, we have durable goods and the Case-Shiller Home Price Index Consumer Confidence Report. And Wednesday, we have the GDP, the second estimate, and the Petroleum Status Report. Thursday is jobless claims and the personal income and outlays. And companies reporting earnings this week. On Monday, we have Workday and Zoom Video. Tuesday, we have Dell Technologies and Agilent Technologies and eBay. Wednesday is Salesforce and HP. Thursday is Hewlett-Packard Enterprise. Seems like a bit of a light week for earnings. All right, so that is everything for the weekly update. Good stuff. Yeah, shake your head. No, maybe. I don't know. All right, let's get to today's market recap. U.S. stocks fall ahead of key inflation data. U.S. stocks saw mixed performance on Monday as investors weighed corporate earnings reports and awaited key inflation data later in the week. Domino's Pizza surged over 5% after exceeding Wall Street expectations despite inflationary pressures. Freshpet Inc. also impressed with a more than 16% increase in its stock following strong fourth quarter revenue and profit. However, Berkshire Hathaway dipped 1.7% despite posting record annual profits. Retail earnings from Lowe's companies, Macy's, and TJX companies, and Best Buy are anticipated this week, offering insights into consumer spending amid concerns about persistent inflation. The Federal Reserve's recent signal of reluctance to adjust interest rates in the near term tempered market gains, with investors eagerly awaiting updates on inflation from the PCE price index, the Fed's preferred metric. Expectations of rate cuts in May and June have waned as inflation remains stubborn. Market attention also turns to Wednesday's release of the second reading of fourth quarter GDP data, reflecting resilient yet cooling U.S. economic growth. Meanwhile, Alcoa faced a 5% decline after proposing a $2.2 billion offer for Australian peer Alumina, and Ford shares slipped 1% due to quality check issues halting shipments of its 2024 F-150 Lightning trucks. I personally would not get a Lightning truck because they run on electricity. Diesel's the way to go. Cryptocurrency-related stocks, including Coinbase Global Inc., Marathon Digital Holdings, and Riot Platforms rallied alongside more than 3% increase in Bitcoin prices. This surge follows ongoing demand for the Bitcoin spot ETF approved last month and anticipation of the upcoming halving event in the summer. What the halving event is that when you mine Bitcoin, you get a certain amount, and when they have these halvings, you get half of what you would have gotten previously. So that in this random or hypothetical scenario, let's say you mine a coin, or you do your mining and you get one coin. After the next halving, you would only get a half a coin. So that that's how this how it works. So again, if you need Bitcoin knowledge, reach out to me. I can point you in the right direction. I'm probably not the best person to explain it. All right, next up, got some data here. U.S. new home sales rise less than expected in January. In January, sales of new U.S. single-family homes experienced a modest 1.5% increase to a seasonally adjusted annual rate of 661,000 units, falling short of economists' expectations of reaching 680,000 units. The Commerce Department's Census Bureau revised December sales pace downward to 651,000 units, from the previously reported 664,000. Despite this, the new home market continues to outperform existing homes. Due to persistent inventory shortages in the latter. Extreme cold weather in January, affecting large parts of the country, potentially discouraged some buyers from venturing out, impacting retail sales, home building, and factory production. Yeah, I live here in the mountains now, and I couldn't imagine trying to move in the winter. I got a driveway that's like this. So I couldn't imagine slipping around trying to carry couches and furniture out. I don't carry that stuff anymore. I'm way too old to do that. But, even I'd feel bad for the guys I hired to do it. If someone fell and broke their leg, I'd, feel terrible. All right. Where were we? However, new home sales counted at contract signing rose 1.8% year on year. Sales surged in the Northeast, 72%, and in the West, 38.7%, with a 7.7% increase in the Midwest. Conversely, sales plummeted 15.6% in the South, reaching their lowest level since September of 22. Prospects for the new housing market remain positive as measures of future sales and prospective buyers reached 6-month highs in February, according to the National Home Builders Association survey. Although mortgage rates have risen recently, economists anticipate a downward trend later in the year, providing new support for new home sales, particularly as many homeowners have locked in rates below 4%. The median price of a new home in January decreased 2.6% year on year to $420,700, with builders reducing incentives like price cuts. The share of builders offering price reductions dropped to 25% in February from 31% in January. Most homes sold last month fell within the $300,000 to $749,000 price range. Inventory levels remained relatively stable, with 456,000 new homes on the market in January. The supply of houses would take 8.3 months. Is that new homes or existing? I'd have to go back to the article. 8.3 months to clear the January sales pace, unchanged from December. I guess it's new homes. Houses under construction constituted the majority of inventory, 59.2, followed by homes yet to be built, 23.2, and completed houses, 17.5%. All right, so it looks like the housing sector's, hanging in there. Like I said, rates did go up and then they did creep down a bit in the last 6 months. So they're not quite as bad as they were. But again, I really don't feel a whole lot of sympathy for these folks. I mean, interest rates at 6 or 7 is not exactly just awful. All right, last article here today comes from our friends over at First Trust, Mr. Brian Westbury, their chief economist. His article this week is titled Watching the Fed. All right. This week, investors are closely monitoring various economic indicators that could influence the Federal Reserve decision on interest rates. Data releases include new home sales, capital investment, GDP figures, consumer incomes and spending, manufacturing activity, and auto sales. Expectations for rate cuts by the Fed have shifted, with futures markets now pricing in 3 or 4 cuts totaling 75 to 100 basis points. And for people who speak English, that's 0.75% to 1% even. And those changes would be in 2024, down from the previously anticipated 5 to 6 cuts totaling 1.25% to 1.5%. This adjustment follows strong employment reports and an upside surprise in Q4 GDP data. In addition to these key data points, investors are paying attention to the growth of money supply, specifically the M2 measure, which few typically focus on. Despite quantitative easing during the 2008 and 9 financial crisis, M2 did not surge significantly, largely due to regulatory requirements boosting bank reserves. However, during the COVID-19 pandemic in 20 and 21, M2 skyrocketed by 40.7%. Where did the inflation come from? I'd say it was that. Contributing to inflationary pressures seen in 21 and 22. Subsequently, M2 declined by 3.2% in 22 and 23, moderating inflation but not hindering economic growth. Recently, M2 has shown a moderate increase, up 4.1% annually in the last 2 months of 2023. The trajectory of M2 is being closely watched, as sustained growth could be positive for economic stability and potentially reduce the risk of recession later in the year. Meanwhile, analysts are observing the relationship between short-term and long-term interest rates, with the 3-month Treasury yield surpassing the 10-year yield since October of 22, signaling a potential recession. However, in current monetary policy environment characterized by abundant reserves, traditional yield curve signals may be less reliable. Despite the Fed's assertion that it can adjust rates according to economic data, critics argue that this approach has led to market distortions, with short-term rates no longer exceptionally low and the money supply decreasing over the past 18 months. Signs of economic weakness have emerged, including declines in retail sales, manufacturing production, and home building. Observing the path of M2 could provide insights into the extent of economic challenges ahead. And actually, I had a chart up here earlier from Fred, which is the St. Louis Federal Reserve, and I've closed it, so I'm not going to try to find it right now. All right, well, that wraps up everything as far as news for the day. Again, looking at what the Fed's going to do. Are they going to lower interest rates? if I were running the Fed, if I were in Chairman Powell's shoes or sitting in his big fancy leather chair, I'd leave things alone. I mean, they've already, well, first of all, if I was in his shoes 4 years ago, I would have told Trump to pound sand. We're not printing all this money. It's going to create a huge problem. I don't care how badly you want to get reelected. And, but he signed all those stimulus bills, and then, Biden just did more of the same. So, they're both bad. I'd hang them both from trees, but, I don't get to make that decision yet. So maybe one day soon I could be the warlord of Perry Park. That is, something I have, I'm working on here. So anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you guys next time. Adios.